Welcome friends, in this video we'll Xcn coin Skyrocket. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Looking carefully at the chart, we can see that an inverse shoulder-head-shoulder pattern is clearly forming, which is considered a very strong reversal pattern in technical analysis. The formation of this pattern usually signals the end of a downtrend in the market and the beginning of an uptrend. The H&S pattern is a very meaningful structure that reflects the psychological turning points of traders. In the current situation, the first shoulder has formed on the chart, then the price made the head part with a deeper decline, and then recovered again, and is now in the process of forming the second shoulder, the last part. In order for this structure to be completed, the price needs to clearly draw the second shoulder and then break the resistance level, which we call the neckline, upwards. Looking at the current price action, we see that this scenario is quite likely because the price has started to stabilize in the last shoulder area, volatility has decreased, and buying pressure is slowly starting to show itself. Once the pattern is completed, according to the measurement criterion often used in technical analysis, the price target is determined by moving the vertical distance from the bottom of the head to the neckline upwards by the same measure after the breakout. So if the price breaks the neckline of this structure upwards in volume, we can see that this depth is moved upwards by the same amount as the minimum target. This implies a very satisfying bullish potential. One of the details to pay attention to at this point is the way the neckline is broken and the trading volume during the breakout. If a significant increase in volume is observed during the breakout, it means that the breakout is healthy and a safe buying opportunity may arise for investors. Otherwise, breakouts that come on weak volume can often be false breakouts, which can lead to another pullback in price. Due to the structure of the pattern, such post-decline reversal patterns are seriously followed by market participants. This is because the H&S pattern can signal not only minor corrections, but also major trend reversals. Therefore, the price movements that will follow this pattern are very critical. If the price starts a strong rally towards the neckline after completing the second shoulder and manages to cross this level, this could be the beginning of a new bullish wave in the market. To summarize, this inverse shoulder-head-shoulder pattern that we are currently following is a very strong reversal signal in terms of the current state of the price and the technical outlook. With the completion of the last shoulder, the upward movement can be expected to accelerate. However, the final confirmation will come when the neckline is crossed with a volume breakout. If this happens, there could be good short-term and medium-term opportunities for traders. The target of the pattern is as deep as the depth of the head, indicating a serious upside potential. But we need to look not only at the patterns, but also at other metrics. Stay tuned. When we examine the bigger picture on the chart, we are presented with a highly meaningful and technically consistent Elliott wave formation. According to this structure, price movements continue to unfold within the framework of classic Elliott wave theory. At present, it is clearly observable that the price has entered the third wave of this larger Elliott structure. This phase is typically where the market gains the most momentum, characterized by steep and decisive price action. The third wave is often the stage where both investor interest and trading volume intensify, and where buyers gain psychological confidence. Looking at the levels marking the beginning of this third wave, we can see that the price recently reached the 0,382 Fibonacci retracement level. This point often acts as the first resistance level. As expected, the price encountered a strong technical barrier at this level and was unable to break through on the first attempt. This kind of reaction is very common in the market. The 0,382 level is closely monitored by both algorithmic systems and manual traders. When the price reaches this level, profit-taking often occurs, new positions are held off, and the upward momentum temporarily slows. However, it would be incorrect to interpret this pullback as a negative sign in the context of the Elliott wave structure. On the contrary, such minor corrections are typically necessary pauses that allow the price to advance in a healthier manner. The inability to break through the 0,382 level on the first try also confirms its technical significance. Historical chart patterns frequently show that such strong resistance levels are more likely to be broken on the second or third attempts. If the price recovers and revisits this level, the probability of a breakout will be significantly higher. If this breakout occurs, the next technical target range appears to be between the 0,618 and 0,786 Fibonacci projection levels. This zone typically serves as the next resistance area, and it is quite natural for the price to consolidate briefly here. Reaching these levels would signal a further strengthening of the third wave. This range is also where the investor psychology of "I'm not too late" peaks. At this point, new buyers generally enter the market, and the price momentum increases further. Price movements in the 0,618-0,786 range will likely be marked by increased volatility, extended candlestick formations, and higher daily trading volume. A short-term correction that may follow this zone is usually considered a technical breather, allowing for further upside movement. During such minor pullbacks, staying calm and adhering to the technical structure is the most sound strategy. Following this correction, the most significant target expected for the price is the 1,618 Fibonacci projection level, which marks the minimum target zone for the third Elliott wave. This level is generally seen as the point where a strong upward wave completes or begins to lose momentum. However, third waves don't always stop at 1,618. If the market is supported by strong news flow, volume, and investor interest, the wave can extend to 2,272 or even higher projection levels. Within this comprehensive analytical framework, the price is currently in the early stages of the third wave of a major Elliott wave structure. It has touched the 0,382 level, but failed to break through on the first attempt, which is completely normal. If this level is tested again and broken, a strong rally toward the 0,618-0,786 levels could follow. After a brief pause around those levels, the 1,618 Fibonacci projection becomes the primary technical target for the third wave. If market momentum continues to build, even higher Fibonacci projection levels may come into play. In conclusion, the current technical position of the price suggests that we may be on the verge of a larger rally. However, it is crucial to respect technical levels throughout this process and confirm each movement's alignment with the Elliott structure for a more disciplined and sound analytical approach. When we look at the MACD indicator, a striking technical setup comes into view. Currently, the MACD lines, namely the signal line and the MACD line, are positioned above the zero level. This essentially indicates that positive momentum is prevailing in the market and that short-term averages are trading at higher levels compared to long-term averages. This structure above the zero line typically signals a continuation of an uptrend and confirms that the market is currently in a buying mode. The distance between the signal line and the MACD line is gradually increasing, which indicates rising momentum. This widening formation is usually a sign that the uptrend is gaining strength and that market participants are increasingly taking long positions. Even if there are short-term corrections, this remains a strong technical argument in favor of the broader bullish scenario. Especially if the MACD lines continue to stay above the zero level, it suggests that the positive sentiment in the market may persist for a longer period. If the MACD lines continue to move upward from this point and further increase their distance from the signal line, this would be a key technical signal indicating accelerating bullish momentum. Particularly, expanding green bars in the MACD histogram suggest strengthening buying pressure and the potential for sharp upward price movements. The MACD histogram represents the difference between the two lines, and as the lines diverge, the histogram grows, indicating an acceleration in the uptrend. Furthermore, when the MACD remains above zero and the histogram also expands in the positive territory, this is considered a bullish confirmation in technical analysis. This structure notably increases the potential for price to reach higher highs. Market participants often interpret this scenario as an additional buying opportunity. So, if the MACD continues its upward trajectory at this level, sharp and rapid price increases should not come as a surprise. Additionally, the MACD maintaining this positive outlook often marks the early phase of major price movements. Especially for an asset that has previously been in a consolidation phase or under bearish pressure, a crossover above the zero line typically signals the beginning of a new trend. The fact that it is already holding above the zero level now strongly suggests that an ongoing uptrend is likely to continue. In this context, if the MACD lines maintain their current positive positioning and continue to move upward while the histogram bars increase and expand, the likelihood of a much stronger upward price movement becomes significantly higher. Historical examples of similar MACD setups have often been followed by strong rallies, technically supporting this view. Such a formation usually coincides with a period right before a major resistance breakout, or the formation of a new peak. Therefore, we must continue to monitor the MACD indicator closely. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.